Did you know the mortgage rate you're being offered isn't the same at every lending institution, even if you have the same credit score and down payment? So, today's video, we're going to break that down so you have a better understanding of the home buying process, no matter if you're in the process right now or you're thinking about doing it. And let's be honest, we all know somebody that at least is getting into homeownership or trying to do that. So, the first thing I want to define, which is going to set the groundwork for what we talk about, is understanding what a par interest rate means and how it's affected. So, a par interest rate means that the rate the lender is offering that doesn't have any discount points associated with that interest rate, or the lender is not giving you a credit for the interest rate. And what that means, in basic terms, is that if you're giving you a rate with no discount points, that's their par rate. If they give you a higher rate than par, then they're actually able to give you a lender credit, which is different than a seller credit. Now, full transparency in this, I really haven't seen too many people get offered lender paid because it just doesn't make sense. The juice isn't worth the squeeze to be able to do that. Now, the reason why this par interest rate changes so not wildly, it just changes based on who you're working with, because costs, just like in any business, get broken down by their expenses. So if a company has heavy marketing expenses, they're always marketing to you, they have a lot of branches, they have a lot of people that work there, all that costs money to sustain, right? And they look at their projections of how much and volume they're going to do in mortgage transactions, and then what happens is they take that, divide it, and they want to know what their profit margins look like. That's why typically when you're talking about large lending institutions, you're going to see one of two things. Either you're going to see them have very high costs because they have a crazy overhead. Sometimes you see moderate because they have maybe a mix of things, and sometimes you'll see places that offer really low rates just because maybe they might be really efficient at it. But with word of caution when it comes to looking at interest rates, because this is something we're always talking about, is going to be understanding what the breakdown and cost of that money is. Because lenders still may have underwriting and processing fees or origination fees when it comes to your VA home loan. So, when someone says, oh, I'm getting this interest rate and I don't have to pay any fees for it, it's kind of like spidey senses go off where I'm like, let me take a look at your loan estimate or your documents. And sure enough, once they get the documents, they are being charged for whatever they're trying to do. I mean, I just had this happen to somebody I know recently where we looked at their documents and we're like, wait a second, like, do you realize you're paying this money? And they did not at that time. Now, what are mortgage rates, tied to, as far as like how do we get the baseline plus a built-in margin that covers costs? So remember, all mortgages are sold, well, primarily government loans, Fannie, Freddie, are typically going to be sold by mortgage-backed securities, right? Not just from the Federal Reserve. Another indicator of what rates are, or you could take a look at, is going to be the 10-year Treasury yield, which is a good indicator where mortgage rates are heading. It's something that I check all the time to see, are we doing good or doing bad? But it's definitely not 100%. Like, yes, the Feds dropped the 10-year Treasury dropped a little bit. All of a sudden, mortgage rates just went down 0.5% or a point. Now, have we seen that happen? Sure, we have. But that's something you need to keep an eye out. And when you're going through the home buying process, look, it is extremely hard to time it no matter how many deals you do. And I'm using myself as a good example. The day that I closed on my home last year or the year before, interest rates literally dropped like 0.5%. It was so sad. But I couldn't cancel and then redo everything. So sometimes it's just the cost of doing business. And this is why it's so important to understand your budget, and whatever you're trying to do is within what you can afford, right? And other factors with the interest rates is inflation, unemployment, and reserve policy, like easy monetary easing, which we've talked about that before. But I want to just kind of touch back one more time on some of these lender adjustments, because lenders may offer the same products, just like with interest rates, but what they will offer sometimes is overlays to certain products. This is especially happens with veterans looking to purchase properties, because lenders will have overlays where one lender won't approve them, but like we'll take a look at something, but like, yeah, this is definitely a doable deal. And then we kind of go through that. And again, it's the cost of a lender that gets put in and what margins they really want to be able to make on that piece. Now, let's talk about, does a buy down make sense and how you compare other lending institutions with this situation. Now, this par interest rate is something that you want to be able to ask a lending institution. Now, they may tell you like, what is a par rate? That's not a good sign. But regardless, you want to be able to at least like, what's the interest rate without paying any lender fees? And then they should be able to tell you. Now, typically they're going to look at your credit to let you know, but to get like a verbal information or verbal exchange to say, hey, this is what the rates can be based on your situation, providing you qualify for all the disclaimers they need to provide to you, at least they can give you some numbers to that. Because we've done videos before on loan estimates where, people are like, I want to know the exact closing costs for my home transaction. Well, that's not possible because it's mostly third-party fees, and lenders just don't know what those are on a purchase transaction. Whereas on a refinance, they definitely have a better idea. Now, the way a buy down works is, let's say you have your par rate and you want to buy the interest rate down. Now, historically, what people have said is that, if you buy down 1% or 1 point, which is 1% of loan amount, you can reduce your interest rate by an eighth or a quarter. Well, that's not how things work in today's battle space, I was going to say, but in today's lending environment. And the reason why is because margins drastically change based on what the markets are anticipating and what lending institutions are anticipating to happen, so they can hedge their money, right? That's where it all comes from. So sometimes we'll see a small buy down, let's just say, for example, $2,000 to save 0.5% on the interest rate. Well, depending on your loan size, that can make sense. If you're buying an $80,000 property, that's barely going to have a ding and it's not going to make sense. But now if you're looking at a $600,000 property, 100% you'd want to be able to do that. Right? I'm not telling you to do that, but look at the numbers, and what you look at is your recoupment period. That means what's the difference between X payment and the lower payment based on the savings, right? So if I save $200 a month, but it costs me $2,000 to save $200 a month, I recoup that within 20 months. Rule of thumb is 36 months or less, you're good to go. I'm a fan of a shorter time period. And the reason why is normally people refinance, I think, within like 18 months of buying a place because market rates adjust. Remember, it's like a roller coaster with interest rates. You just got to catch it at the right time. It happened last year. Plenty of people took advantage of it. Wildly great for them because at the end of the day, who doesn't want to lower their payment? Because values historically go up. This is, again, why it's so important. If you want to do something and you can afford it today, do it. Otherwise, the rates are unpredictable, but at least values historically have gone up. So that's just something you want to be able to take a look at from that perspective. And for other folks too, if you're getting a seller credit, you may be looking at buying down the interest rates anyway, just because if you're getting too much in credits, you can't pocket that money anyways. If you get too much seller credit, because we run into this all the time, the VA loan allows you to get up to a 4% seller concession. And I'm going to do a whole video on just understanding max closing costs, how they work, and how you can do that. Another thing that lenders do charge is origination fees and servicing fees for their loans. So that's just something that you just need to be aware of and just track. That is typically a normal fee to be charged. Even if you're a veteran with VA disability compensation, the only real advantage you have in the sense is that if you have a 10% or greater rating, you don't have to pay the VA funding fee, which is a pretty hefty fee, especially if you use the loan multiple times and you don't put a down payment, which leads me into, does it make sense to do a down payment on the purchase of your property? And so this is why it's not a one solution fits all. Like, I'm doing a buy down on my interest rate, and then I'm going to, with that buy down, I just want to be able to have a lower monthly payment. But why not do a principal reduction on your property, meaning you're doing a down payment, and then just keep the par interest rate? Because again, over time, you're going to pay less interest because you have a lower balance. This is why you guys got to do the math. And your lender should be able to do it. And if they don't want to do it, call me. Happy to walk you through that whole process, spend time with you, and really, give the attention that you need, because this is a big decision. I feel a lot of times people just kind of like steamroll through it, and you're like, come on, man, that's not how it should be. You served your country. I understand that, right? Served myself. That, like, being able to provide as much information for you to make the right decision, not a foolish decision to just jump into something where, you may think it makes sense, but no one's pointing out the things that are obvious, like maybe it might not be the right time or whatever the case may be. And then it's your call. But we want to at least be able to walk you through that. And if you're getting interest rates that seem like way lower than anyone else, those are spidey senses that should go off. You should be really looking at, like, hey, is this really person telling me the truth on that? So hopefully you guys got some good information from the video. Please make sure you hit the like and subscribe button. Drop any questions you guys have about the buying process so I can make a video on it. Otherwise, I'll get you guys in the next video.